Hi everyone, welcome back to the Thinking Crypto channel. I have a very special guest with me today, Bill Barhydt, who's the founder and CEO of Abra. Bill, it's a pleasure to have you.
Thank you so much for having me. Real pleasure to be here.
Bill, I follow you on Twitter, so I'm excited to talk to you about different topics. Of course, Bitcoin, I want to learn about what Abra is doing. But before we get to that, can you give us a bit of your background? Where are you from? Where did you go to school?
Sure. Yeah, I'm from the New York City, New Jersey area myself. Grew up mostly in that area. I've lived in a bunch of countries since then. Lived in Europe for several years, lived on both coasts. I've been, 60, 70 countries in the meantime. So I'm a New Yorker at heart. My family's mostly there. So I try to get back there pre-COVID as much as I can. Yeah, for sure.
Got it.
I studied computer science, math guy through and through, tech geek. I came up kind of through traditional kind of government and then Wall Street, and then slowly made my way towards software, being an entrepreneur, kind of Internet 1.0, Internet 2.0. Now, of course, everything's, I'm all in on crypto and have been for probably about 7 years now.
So when did you first discover crypto? What was your aha moment? Like, wait a minute, there's something here.
Yeah, for me, it's probably a little different than most because I've been working in cryptography and then payments on the internet since basically you could. We worked on the early first credit card gateway back in my Netscape days. We worked with DigiCash, which was kind of a precursor to Bitcoin. And so I always understood as part of the cypherpunk community the double spend problem of having a trustless payment system. And for the viewers who don't understand that basically means how can two people hold the same currency, digital currency, and only one can spend it? That's always been kind of the holy grail problem of digital currency, right? So when I first read the white paper for Bitcoin, going back, I think it was maybe 6 months even after it was released, I was kind of shocked. I said, I don't think this is going to work. I mean, this guy is contemplating using every single computer in the world to solve the double spend problem. That doesn't seem very efficient to me. And I put it aside and, it was on the mailing list. It wasn't getting a whole lot of attention. Somebody else said to me, have you looked at this Bitcoin white paper? I looked at it again a few months later and I said, and then I had kind of an aha moment and I realized, I said, if the challenge is decentralization and solving the double spend problem, that's different from efficiency and transaction throughput. And the two don't necessarily have to reconcile. I think this guy or gal or group, whoever it is onto something here. And that was probably a year after the white paper was released. I started talking about it to everyone who would listen. And I ended up doing the first TED Talk at the main TED conference on Bitcoin in 2000, I think it was 2011 even, or 12, whatever. It was nobody had heard of it basically. At that point, it was starting to get some traction on Silk Road, which was the infamous kind of marketplace for all things vice and some shady and nefarious. But anyway, the point is that nobody knew what it was, and I was still getting my arms around it. But the more I dug in, the more I realized that everything has its time. And this was the right time, right? Internet was pervasive. Smartphones were starting to become pervasive, kind of a little early still. Cell phones for sure. Smartphones were early. But I just knew that the world needed this. And I had spent a lot of time in the remittance space. I had a company in that space, which I sold. Went through the trials and tribulations of dealing with remittance regulation in dozens of countries, which is very complex. And this idea that people could hold their own money on their own smartphone and become their own bank effectively was extremely powerful for me. Anyway, so that pushed me further and further down the rabbit hole, and lo and behold, 8 years later, I'm all in and having the time of my life.
So you are certainly an OG in the crypto market. I mean, you're here early, and given, you mentioned that your history in the internet and started from Web 1.0, and I have to ask, because I've interviewed Brendan Eich when he mentioned when he was there at Netscape. Did you guys cross paths?
Oh, absolutely. I consider Brendan a good friend. We've known each other for probably almost 30 years now. When he wrote JavaScript
Yeah.
at Netscape, he was kind of a god inside of Netscape back then. He was a kid. We were both kids,
Wow.
and so I could tell you 100 stories. The CEO of BitGo is also ex Netscape, and so we've got kind of a little crypto club going on in the kind of Netscape annals of history. But yeah, Brendan's awesome. I mean, I think what he's done with the Brave browser and his take on privacy is spot on, and I'm really happy to see their success.
Got it. So I know you're bullish on Bitcoin, and we're going to talk more about it, but do you hold anything else in your personal crypto portfolio that you can
Yeah, I do
disclose?
hold Ethereum. Those are long-term holdings, not nearly as much as Bitcoin.
Hmm.
I trade in and out of certain altcoins on occasion. I don't
Sure.
hold altcoins long-term. I do a lot of research on altcoin technology. That's very interesting to me. And I'm always trying to figure out which technologies that are pushing the envelope in the altcoin space are going to eventually make their way either into Bitcoin or for whatever reason break through and become that kind of second and third or fourth crypto that really matter. Independent, and I'm not including stable coins in that. I
Sure.
always hold stable coins for different reasons, but at Abra we have over 100 different cryptos in our platform, and all are popular. All of them are popular for different reasons.
Sure.
And I'm very fond of saying, and I'm known for saying this, that it's that the competition that we get in technology for moving crypto forward is essential, right? The more valuable Bitcoin becomes, the harder it is to change Bitcoin,
Hmm.
and that's a feature, not a bug, right? And
Sure.
so we need that technology competition to help show us the way. I don't want Bitcoin to always be the first to implement what might be considered risky technologies,
Hmm.
Mimblewimble or whatever the latest and greatest is going to be. I'm grateful that Litecoin is there to use it first. I come in and out of Litecoin all the time as payment rails,
Hmm.
right? I should also mention that a lot of people got into Bitcoin from a speculative perspective. I didn't. I actually didn't hold a lot of Bitcoin in the early days because I wasn't that interested in it as digital gold. I was very interested in it from a payments perspective because I was coming at this via my time in Mexico and Guatemala and the Philippines and the Caribbean, where I was focused on basically helping the underserved from a banking perspective.
Right.
And then later on, I said, hey, I need to start holding some of this because I know more than most and I'm missing the boat here. So that happened later. But my primary interest at first was payments. And I still come back to that a lot. I'm always looking for ways to kind of build that banking stack in crypto, which is really what Abra is all about, right? My day job is running Abra, and Abra really is trying to be the world's best crypto banking service, right? And we're always looking at how myriad technologies in crypto will have a key role to play in making that happen.
So, what that story you just told about, where you notice around the world, there's obviously an unbanked issue. Folks don't have access to proper financial services. Is that the genesis of the idea behind Abra? Why you decided to start the company?
It was part of it. I mean, first of all, people don't perceive themselves to have an unbanked problem. Nobody
Mm.
says my problem is
Yeah.
I don't have a bank account. So we'll come back to that in a second, though. What I wanted to do, and the opportunity I saw with Bitcoin was the democratization
Mm.
of banking, meaning that why don't we have one banking service globally that everyone can use? There's this mantra here in Silicon Valley that software is eating the world, and especially internet-based, cloud-based software is eating the world. That's been true for almost every industry except banking and money, and they're not exactly the same thing. And so a lot of that is due to regulation, government monopolies, but it just never happened. And I said to myself, I realized that what was happening with Bitcoin was really the best opportunity I've ever seen for that to actually happen in money. Right? And so that really was the original idea behind Abra, where we would offer money transfer and payments, lending, investing, all kinds of services using and leveraging cryptocurrencies
Hmm.
to basically rebuild a new banking stack. And so now we're focused on, we've got the custody aspect of it, the trading. We allow you to earn interest on deposits, both in dollars and crypto. We've got the lending, and so the stack is building, right? And so I think you'll see more and more money transfer services based on crypto in the future. And so, yes, but I also wanted to have a service where it didn't matter if you were, in Central America or in a remittance receiving market or in the US or in Europe, it could all be the same service that you use.
Sure.
Just like there are rich billionaires using WhatsApp and there are poor migrants using WhatsApp, I want that for banking. I want basically a democratized model that says everyone can play, everyone can access.
Right.
And that's what we're all about at Abra.
Very cool. I love that vision. And I think to your point, the software has not caught up to the banking financial industry. And it's great to see that you guys are leading the charge there. So I want to ask, because I did notice you have an OTC service over the counter.
Yeah.
And I'm curious because a lot of my viewers, and listeners are curious about the OTC markets because it's kind of something behind the curtain that they don't get to see. And if you can talk a bit about the demand you're seeing there.
Absolutely. So OTC stands for over the counter. It's basically a way of, let's make it really simple. It's a way of buying and selling that is off of an exchange. Mm-hmm. Now, that's a little bit of a misnomer because the liquidity probably makes its way onto an exchange at some point, just not directly at the time of the transaction. And that has certain advantages. If you're doing lots of large buys that you're going to space over time, or sells, if you're going to dispose of assets, you don't want to move the price in a market that's not highly liquid. Now, Bitcoin is liquid, but large players can move the price, especially in the short term. And so OTC functions basically allow you to have more anonymity, more privacy. They allow you to have more price stability in a transaction. They allow for post-trade settlements depending upon the counterparty and the risk they're willing to take. What that means in English is I may assume that the trade has happened at noon today, but the settlement may not happen for 7 hours later, or something, and there may be an implicit contract between the parties that the settlement will happen then. And so there's myriad reasons why someone would use an over-the-counter function. Now, these services are generally reserved for people doing much larger trades because of the hand-holding and cost involved. So generally, there's different use cases and different user experiences, but a common one now is you have a Telegram chat with a specific user, and that user will agree to a trade, and then there'll be a settlement. And obviously, there's implicit trust there if the settlement isn't real time, like on an exchange. Sure. And so you're not going to do that for $5 trades. Right? We're talking about usually $50K and up. And so often in the millions. And so for Abra, like I said, we have people in the Philippines buying $5 worth of Bitcoin, and we have people in the US and other countries buying $1 million worth of Bitcoin. And that's fine. We love that, right? And so OTC just allows us to have another tool in our toolbox to service the high end, just like we also try to service people doing smaller dollar purchases.
Got it. That's very insightful. Can you talk a bit about and I ask every respective crypto exchange and folks who have apps and so forth about security and custody, because it's always a lingering question in people's minds. Are my cryptos safe, right? Given even just the stuff that happened with Ledger recently.
Absolutely. Absolutely. So I'll gladly say that in 5 years, or as long as we've been running Abra, we've never suffered any kind of data breach or hack. Our systems are locked down. We take information security very seriously. Our own crypto is not online. So even if you hacked Abra, there's nothing to steal. We use multiple custody partners for different services. We use multi-sig for certain things. So there's different layers of security. We take a risk-based approach. The last kind of layer in that is people who want to access their funds in real time. That's always the biggest risk. Because if you can access it, then in theory, someone else can. The worst case scenario is you're standing next to somebody who steals your phone while you're logged into the app.
Right.
And so what we tell people in that scenario is if you're holding more than $1,000 in the Abra app, put that backup phrase somewhere other than on your phone, and immediately get another phone, put the backup phrase in the new install of the Abra app, and you'll be good to go, even in that worst case scenario. All right. But Abra itself has, like I said, never been hacked. We use multiple custody partners. We use multi-sig technology, and all of the key things that you would expect a smart fintech player to do in the crypto space. And there's a reason why we haven't been hacked. And trust me, they're trying.
Yeah.
The barbarians are constantly at the gate. We don't talk about it publicly because there's no upside.
Sure.
But we're doing lots of things from our corporate website to our back-end systems to constantly make sure that we're way ahead of those barbarians that are at the gate trying to get in.
Sure, I absolutely believe you that there's probably constant attempts
Yeah.
to try to get in.
The way it goes.
Yeah,
And we're good at it, like I said, and we're not arrogant about it because you have to be vigilant in the crypto space. And you also have
sure.
to take some personal responsibility.
Yes.
And like I said, take care of your phone. That's the most people do anyway. Right? They treat it better than we would have treated the wallet, when I was a kid. But take care of your phone. Write down your backup phrase. Know how and where to buy a new phone quickly if you need to. Lock down your SIM. This is a big one.
Right.
I can't tell you how big a deal this is. The biggest reason why people get hacked on other exchanges is what we call SIM hijacking or SIM jacking. That's where somebody basically steals your phone number and they target you because they think you have crypto. And then they think that they're going to be able to reset your password using the SIM. Now, with Abra, that's not possible. You can't reset a password using the SIM. We don't have a way to do that. But it is with other exchanges. So if you're using other exchanges in addition to Abra, lock down your SIM. Call your carrier and say, I don't want my SIM to be ported unless I come to the store with an ID. That's another kind of tidbit for people who are appropriately concerned about their personal security.
Yeah, that's a great tip, especially in the COVID environment where a lot of transactions are happening online and over the phone because people are not going to destinations. So great point.
You shouldn't be using your mobile phone for two-factor authentication anyway, or SMS, I should say. You should be using apps like Authy or Google Authenticator. But some banks have not caught up to this, and so they force you to use the phone. Be very careful and lock your SIM. And complain to your bank.
and you brought up a great point of having that secondary phone. I've personally done that where that's where my authentication is actually happening. It's not connected to, there's no SIM card. It just works on Wi-Fi. Yeah. The great tips, Bill. Those are so important. And glad to hear Abra, has sustained a great level of security where you guys haven't had any issues. That's awesome. So I want to ask, and if you can, maybe hint to some updates we can expect in 2021 from Abra.
Yeah, I don't want to give it all away, but I'll say a couple of things that I think should give you some insight. So let's just recap what we've done and what the trend is here, right? So this year we launched all kinds of what we call liquidity services. Dozens of countries now you can deposit and withdraw funds from Abra to buy Bitcoin and other cryptocurrencies, right? We launched a high yield service that allows you to generate 10% interest on dollar deposits or stablecoin deposits, either one. And then 4.5 to 5% on crypto deposits, Bitcoin, Ethereum, Lumens, others, right? Litecoin. And so what's happening there, and then we always had our money transfer service as well, which is very popular. You can literally move True USD or other stablecoins between two users without going on chain, convert them to your favorite crypto, move off chain to a hardware wallet, however, or withdraw via one of our partners. So we've always had the money transfer, we've had the trading, now we have the high yield interest. So we're basically building, if you will, a banking stack that is crypto centric and global at the same time. So if you think to yourself, okay, well, what are the services that I want in that banking stack? Maybe you have some good insights as to where all of this is going for Abra in the next few months and a couple of years. Our aim is to get Abra as global as possible and as user-friendly globally as possible, something we're very focused on. And then just more and more of those key kind of critical banking features, payments and lending and all the things that you would expect in the banking stack. That's where I'll leave it at that and say that's where it's going.
Got it. That's exciting, and I love all those features. And it sounds like there's some things in the works for 2021, but I certainly understand that you can't disclose now.
It's been a nice little bit of a break, but not much of a break. We're so busy at Abra right now, and the team is working so well and so hard. I couldn't be happier with how we're doing.
Awesome. Let's shift into Bitcoin because we've seen just some almost $1,000 days in Bitcoin. Just right. Significant price increases. I want to get your perspective, given that you're an OG. I mean, you read the white paper in 2011, and now we're at $26,000. And where do you see us next year? Possibly a price prediction if you can share, and even from an adoption standpoint.
Sure. So this is an amazingly interesting time. I mean, I spend part of my time hobbies, like I am a trader at heart as well. I do come up from, Goldman and that environment. So while I focus on building a retail service, we also run an institutional part of our business, which is highly focused on trading and lending of crypto, kind of almost like a prime broker. So, so I spend a lot of time thinking about the macros of Bitcoin and crypto in general. So when I look at Bitcoin right now, I see basically something that I haven't seen in my I'll call it my 30 years of adult working life. Just haven't seen it, right? You've got a new asset class. How often do we see a new asset class?
Right.
I think it's happened in outside of Bitcoin or in crypto. I don't think that's happened in the lifetime of anybody alive today, right? So there's that. There's the fact that you've got these underlying fundamentals where you've never had a provably scarce asset of some kind ever, never mind digital, right? So that it was easy to move around, right? Gold is not provably scarce.
Right.
We don't know if 10x the amount of gold we have now is going to be found next year. Right. We speculate that won't happen, but we actually don't know, okay? So the fundamentals are perfect, right? The technicals of where Bitcoin is now are incredible. We have this kind of undertone of basically having this 2017 peak where, people, there was euphoria, right, from a sentiment perspective. That's died down, and it really never recovered.
Right.
So we basically had this price recovery over a few years that was driven by a relatively small amount of speculators with very large holdings. Now we have a relatively small but growing amount of institutional investors who are saying, this is digital gold with the backdrop of governments gone insane, right? And this idea that, hey, the petrodollar is failing. This is not a macroeconomics seminar, but the system that we built from Bretton Woods to gold-based to oil-based is now in its end game. Nobody's going to buy our debt anymore. No one. Everybody's got their own problems. China bought our debt. Europe bought it. It's not happening. Okay. So the end game is not looking good, right? It's very easy to print $10,000 stimulus checks when the end game isn't looking good anyway, right? So that's a very good telltale sign for where this is headed. That creates a backdrop for Bitcoin that's unbelievable. So the tailwinds pushing this thing, I think, are unheralded. And the last piece, so that I mentioned fundamentals and technicals, the last piece is what I would call the sentiment analysis. And my favorite book on investing is The Art of Contrarian Thinking. And what that book basically tells you is when everyone is on the bus, from an investor perspective, it's probably time to get off the bus, right? Fear versus greed. And when no one is on the bus, take a good hard look about maybe getting on the bus, and maybe there's an opportunity for an asymmetric bet with a large return. That's where we were with Bitcoin probably a year and a half ago. And we're slowly starting to see a trickle of people getting on the bus. From a momentum perspective, that's perfect. That means we're super early and people aren't getting on the bus yet, or in droves aren't getting on the bus yet, right? Like the clowns in the Volkswagen, right? So the clowns aren't in the Volkswagen yet. And I think it's going to take a few years for that to happen. And all that basically adds up to an explosion in demand, and there's not enough supply to go around. So sorry for the long answer, but all of those things together create a setup for me that I haven't seen in 30 years. And like I said, I got into this for, building the banking stack, but part of what we've built is the ability to invest in crypto. And what I'm saying is part of that is I've never seen a setup like this. And that's Bitcoin. We can talk about other cryptos for different things like Ethereum, but that answer is very specific to Bitcoin.
Yeah, I absolutely agree with you. And I think the facts are almost being laid out in front of us where, to your point, IMF is calling for Bretton Woods 2.0. And when I saw
whatever that means.
Yeah, when I saw they put the video out, I was like, So obviously they see the end coming for this current financial system. And the fact that they're pushing a lot of the world governments to build CBDCs, central bank digital currencies, it seems like they're riding the coattails of Bitcoin and the move to a token economy or digital economy, whatever you want to call it. Right. How do you see that playing out with CBDCs and it sounds like it would benefit Bitcoin.
Well, okay. So first principles. Okay. Um, my favorite way of explaining this is I think I'm from New York City area. I think you're in Jersey area. I was a Yankees fan as a kid. My mom grew up in the Bronx. We were all Yankees fans. We all collected baseball cards. Now, my mom has, I didn't know this, but she has a Mickey Mantle, I think it's a rookie card, worth a lot of money. I think it's worth a lot of money. Okay?
No way.
Now, why is this Mickey Mantle rookie card worth a lot of money? Well, it's a silly rhetorical question because it's obvious, right? It's old, it's provably scarce because the company that made it said this is how many are in existence, and collectors know from experience this is how many are in existence, and therefore the market puts a price based on some demand side of the equation. Now, if that same group of people were to discover tomorrow that there were 10x the number of Mickey Mantle rookie cards in existence than they had previously believed, it would stand to reason that the value of the Mickey Mantle card that my mother has would plummet. Okay. Now, when it comes to money printing and how we manage the money supply, that is a concept that people don't seem to understand. Now, I'm oversimplifying for effect, right? Because the money supply there's other factors that go into to the money supply, but the same idea holds. You can't keep your finger on the print button, increase the amount of dollars in circulation by a factor of 3, 4, 5, and not expect that over time, the dollars that you have in circulation don't plummet in value. It just doesn't make any sense. But nobody thinks that way, right? Especially the politicians. And this is where there's no difference between Republicans and Democrats. There really isn't. You get some libertarians and some kind of Austrian school types that get this. But by and large, politicians on both sides of the aisle, there's no aisle, right? And so now come back to your question. Now, I'm not making a distinction with the print button between whether it's paper or digital. The government's underlying ability, Fed, Treasury, government, all is one kind of primordial soup. Their ability to press that print button is exactly the same, whether it's paper or digital. Now, they may be able to get it in your pocket faster if it's digital.
Right.
They may be able to bypass the banking system, but that doesn't mean that it's going to zero in terms of its value.
Right.
It just means that it may be its utility on its way to zero may be increased because of the fact that it's digital. So let's be clear. Is a digital version of the paper dollar as a bearer instrument probably a better technology? Probably. I would say I don't see how that's not true. Does that mean it's not going to zero if they convert to digital? Absolutely not. It changes nothing. If anything, it might get there faster.
Sure. Because
people might have this misperception about what's going on. And they might have this short-term thinking that this MMT bullshit is actually going to save us. And it's not. It's just the end game for a global reserve currency going to zero. It really is. And it's logical. If you think it through, and the global reserve currency is going to zero, and the party that controls that wants to fight it, what would they do? And you end up with a scenario like what we're in now, very late stage in the global debt cycle, populism, and a whole bunch of other things that are going on that we don't want necessarily, but are inevitable. Anyway, so I'm bullish on the technology of central bank digital currencies. I'm bullish on it for remittances, payments, supply chain, money transfer. I am not bullish on it from a macroeconomic perspective in terms of saving the petrodollar system, saving government-backed fiat currencies in general.
Got it. And I think you are not alone in that. We're seeing the likes of Paul Tudor Joneses and PayPal and Square and MicroStrategy, Michael Saylor. These folks are awakening to that, and they're putting a Bitcoin on their balance sheet or in their fund, 1%, 2%, whatever it may be. What are your thoughts on those folks now coming in?
Oh, you crazy not to. I mean, look, it's still at the prices where we're just getting started. Let me take a step back and say it again. If we're just getting started, right, and this is going to replace something that looks like a global reserve currency over a decade, its value has to go up 10,000 fold. It has to, because there's simply not enough to go around.
Sure.
Subdivide it to 8 decimal places, and what what looks like a worthless Satoshi could now be worth pennies, which means
Right.
that Bitcoin is worth trillions of dollars. Now, that ends up looking like the most asymmetrical potential return in history that I've ever seen.
Hmm.
Okay, including stocks and other, and I'm only factoring things that have the potential to actually be worth hundreds of billions or trillions, not like penny stocks that are worth thousands, right?
Sure.
Because this is something that everyone can eventually own a piece of. And so, if you're those people you just mentioned, and you're willing to make outsized bets that might risk 1 or 2% of your fund a year to make an extra 5%, but you can risk 1 to 5% of your funds or assets to return 1,000-fold, 10, 15 years out. That means two things. One, you're crazy not to do it if you understand the math. And two, that Bitcoin is probably now locked up for a very long time,
Right.
which means the supply and demand, equation is getting further imbalanced, right? In other words, there's going to be way less supply and way more demand. And as those lockups increase, it's going to get worse and worse, which is going to create I guess a negative feedback loop, which should drive the price even higher, right? So super bullish. It hasn't started feeding on itself yet, but I expect it to happen. And so, this kind of quasi melt up of 11,000 to 27,000 over the last few weeks is nothing compared to what I think is going to happen when this feedback loop starts to really feed on itself.
And do you think central banks around the globe, not the United States, I'll put the United States to the side for a second, or the G20 countries, well, let's say a Venezuela or Argentina, where the fiat is, it's debased, it's garbage now. Could they put Bitcoin on their balance sheet? Do you see a
Oh, they
scenario?
will. Look, I think that there was a Twitter thread this morning about the mayor of Miami talking about he's getting a lot of techies coming from Silicon Valley now, and between the weather and San Francisco's a disaster, and of course the crypto. The crypto Twitter sphere has been all over this guy.
Yeah.
And one of the questions was, hey, would you be willing to commit to putting a certain amount of your kind of city's, assets and balance sheet in crypto or Bitcoin specifically? And he tweeted back almost immediately that he was very open to the idea. And that's just one city. And it makes sense that would be an early adopter city if they're getting a migration of tech people. But I think that people who have lived through devaluations and failures of fiat currencies en masse, whether it's Argentina or Zimbabwe or Venezuela, they're doing this as a society with little expectation that the government's going to be there as a backstop for them. And so for them, it's less about what's my government doing and more about what can I do for myself.
Yeah.
Right. And so you end up at the same place, but not because some central entity is doing it, it's because the people are doing it. Right. And it's a slightly different answer or different question, I think, than the one you're asking. But I'll rephrase it a little bit and say, I think for a lot of these countries where fiat currencies have a history of failing or are failing now,
Right.
And I can, whether it's Turkey, again, I mentioned Zimbabwe and Venezuela and Argentina, and they're all failing. Every fiat currency has failed, is in the process of failing, or eventually will fail. It's just a question of how long it's going to take, right? The people are going to take over from a personal wealth management perspective, right? You don't want an inflationary asset to store your wealth over time. You want a deflationary asset. When the prices of goods go down versus the asset you're holding, then you're storing your wealth correctly.
Yeah.
Right? Well, the opposite happens today. So clearly we're not doing it right.
Yeah.
Right? But that's not the government's goal. The government's goal is not to help you store your wealth. The government's goal is to manage an economy. And those two things are at odds with each other. They're willing to turn your wealth storage system into a managed house of cards, right? Because their goal is not your goal. Their goal is to basically manage an economy, manage to, a certain level of unemployment, manage to a certain level of price inflation. Again, nothing to do with the value of your wealth. Nothing. They're not interested in it. It's not a critical success factor for any central bank, right? So eventually the people have to take over, and especially as lifespans increase.
Yeah.
Right. If you're living to 60 and 65 years old, that's one thing. But if you're living to 120 which I think is what's going to happen over the next 50 years, right? When we reach this technological singularity and we have basically symbiotic relationship with nanoparticles in our bodies and all this shit that we probably can't even dream of, people are going to live to be 120, 130.
Yeah.
Well, the management of personal wealth is going to mean something very different if you're living an extra 40 years, right? And so I think that's going to be one of the pivotal things that basically represents the downfall of government-based money, is that its usefulness as a store of value for wealth preservation is just not there. It's the opposite of what people like Rubini say, in my opinion.
Right. That's such an interesting point. I never thought about it, where government's role is not to help you in your respective wealth. It kind of goes without saying, but yet I don't think people really view it that way. They almost look to the government now, or we've been trained to look to the government.
Another way to think about it is yes, Bitcoin is going up in value because I measure its value in dollars. But the other way to think about it is actually the opposite way, which is that the value here's my Bitcoin, like my finger is Bitcoin, and it's still one Bitcoin tomorrow. What's happening is the value of the dollar is going like this.
Right.
And so when you think about it that way, you're like, oh yeah, they keep printing more. It's still one Bitcoin, but it's really the dollar's value that's plummeting, right? And so when you think about it that way, and you really get your mind around it, and you think about it in terms of life longevity, it starts to really make a lot of sense.
Sure. I do want to talk about potential risks. I know Bitcoin, people have wrote up Bitcoin, said it's going to die 10,000 times. Bitcoin's dead, but it has survived. It has come through a lot. But do you see things like quantum computing being a risk? Do you see governments with their regulations? We are Mnuchin with his wallet the crypto wallet regulations. And could there be other things that could potentially, hinder or roadblock Bitcoin?
The cryptographic algorithms in Bitcoin and other proof of work cryptos are interchangeable. And what I mean by that is not interchangeable. You could just, tomorrow say it's something else. It's that if there's consensus that it needs to be something else, they can be swapped out, via some kind of fork. And if quantum computing basically says, okay, elliptic curve digital encryption is now breakable and hackable, we'll replace it with something that's quantum proof, and that'll probably happen within 15, 20 years. I don't see how that wouldn't happen at the rate things increase or the computing power increases, right? And so
sure.
I think what's more interesting is to say, is a better technology than Bitcoin going to come along? Probably. But is it going to be so much better that it basically gets new network effects, where it becomes a parallel currency that gets network effects around having a store of value based solution that gets a mass billion user following? I don't know if that's going to happen.
Sure.
But it will be interesting to see if it does. And that's fine. I mean, let's have as much competition as we can from a technology perspective. Let's not just basically blindly, pray to the Bitcoin gods and assume everything will be okay. That's what we did with governments. Let's have lots of tech competition. Let's see if we can push the envelope. Let's see if we can make better Bitcoins. If we can, great. We have Bitcoin. It's all good. I'm certainly all in. But if things change and some kid who hasn't been born yet, or boy or girl, both, design, Bitcoin 2.0, fantastic. We'll see what happens. I'm super bullish on crypto as the future of money and store of value, whether it's Bitcoin plus Bitcoin or something else. I don't know. And I really don't care that much as long as, those entrepreneurs and technologists can do their thing.
Sure. And, we're seeing some movement here from the SEC. They just obviously sued Ripple. And I want to get your thoughts on that. And also, do you see, Brian Brooks from the OCC said crypto regulations coming in January. He said 6 to 8 weeks earlier in December.
Okay. There's a lot of things in to unpack.
Yeah.
About regulation. And remember, the U.S. is just one country.
Right.
We represent a relatively small percent of the global population, an outsized percent of GDP and influence, and we tend to lead in banking because of the way we structured the Patriot Act and all that nonsense. But let's be clear, right? As a commodity, or what the government calls a commodity, the the SEC does not have oversight of Bitcoin and traditional kind of first gen proof of work based cryptocurrencies. If you package an asset or a commodity as a security and then market it like in a gold based ETF, because the SEC does not have oversight of the gold markets. They do have oversight of gold ETFs. Okay, so let's be clear to the audience that's not familiar with the distinction that when it comes to traditional commodities, the SEC has no jurisdiction until you package it as a security to basically sell it on traditional exchanges and do an offering. Okay, so there are no kind of retail-based liquid ETFs or funds that package cryptocurrencies as securities available in the US yet. The closest is this Grayscale product.
Right.
Okay, so put that aside. Right. We will probably have securitized crypto products available for retail, like an ETF, in the next 18 months. I've been saying that for 5 years, but I'm pretty sure that now I'm right. Okay. What the SEC is coming down on is people using crypto to basically say, I'm launching what effectively is a commodity, right? You've heard the phrase utility token.
Right.
Utility token is another phrase for something that's not a security because it looks and smells like a commodity. Right? It's got usefulness as a commodity. And that's the case that Ripple's been making for years. And the SEC just basically decided that's not true. Now, the problem I have problems with both sides. Okay. The problem I have with the SEC side is they waited 8 years.
Yeah. Yeah.
That's just crazy to me. I don't understand that. Okay. I've had my run-ins with the SEC over the years for things that I announced that I might do, not that I did, that I might do, and I don't have a problem with that. They're within their rights as regulators to do what they think is right, whether I agree or not. Okay. Now these guys didn't say they might do it. They did do it for 8 years. What the hell? Okay. Now that's my problem with the SEC side. Now my problem with the Ripple side is, this was purely a money-making scheme for Ripple, meaning we need to pay our bills, we need to sell this stuff to raise money. That's it, full stop. And two people in particular got very rich. And again, I don't have a problem with people getting rich, but it looks and smells just like any other security sale I've ever seen. Now, you can have something that starts out as a security sale, which eventually becomes a commodity. But that's not what Ripple said they were doing. They said this was a commodity sale all along. So both sides, to me, have got this completely wrong. They should have worked this out 6 years ago. So now they basically created a problem for the court system. Because any reasonable judge, in my humble opinion, looks at this and goes, why did you wait 8 years to do this? And on one side. And the other side, why do you think that the rules don't apply to you? Right? So I think what happens as a result is the judge basically forces them to reach a settlement that they might not otherwise be forced to reach, just because both sides, in my opinion, have screwed this up to some degree.
But wouldn't other, like Ethereum, you have the Ethereum Foundation, they've sold ETH to fund the foundation to help build the ecosystem.
And the regulators have said, at the moment you did that, it was probably a security offering. But there was no public guidance.
Right.
There was no specific regulation. So we're going to give everyone who did that before a certain year a pass. This is Ripple's problem. They also could be said to have been included in getting that pass, but they didn't stop. They kept doing it, right? So whereas it became clear that Ethereum was becoming decentralized with no central off switch, and therefore its underlying gas could be considered a commodity, Ripple kept doing primary offerings, or what's looked and smelled like primary offerings, even after the guidance. That's why I keep saying both sides have it wrong. If the SEC had made very clear to Ripple, stop. You have the guidance now, just stop. And they didn't do that, right? And if Ripple had said, hey, or we're going to now register going forward, right, these offerings, and we won't do them in the US or whatever, I don't know.
Sure.
So that's kind of the SEC thing. Now, with banking regulation, it's a mess, right? Because we've got MSBs, which is the states. We've got the OCC. We've got trust banking regulation. With dozens of individual regulators in the U.S. alone that oversee various aspects of this. Brian Brooks, who's the comptroller of the currency of the OCC, and people who don't understand, that's the federal regulator within the Treasury Department that oversees bank licensing. Okay, and he's very crypto friendly because he used to be the in-house counsel at Coinbase,
Right.
which is amazing that we have the head of the OCC. I don't think he'll survive under Biden. I wish he would, but I don't think he will. The states don't like him because he's basically trying to usurp their power. If you work in remittances and are starting a remittance company, the bane of your existence is that you have to get 51 state licenses to operate. Yep. What he said is what I've been saying for years is that's crazy. Right. Let's give these people one fintech charter at the federal level, which trumps all of those state licenses. States don't like that because it basically takes away their power. Their need to exist becomes muted. It doesn't say that people don't have the right to go pursue those licenses. It's just that an illogical person will go after one license as opposed to 51 licenses. So the bottom line is that I think Brian sees where this is headed, and he sees that this is something that the people are going to want, and in some ways do want now, and he's trying to get out in front of it in a way that I think makes a lot of sense, or is starting to make a lot of sense. He's very tech friendly, he's very startup friendly, very entrepreneur friendly. He can't fight the Fed and what Treasury does in terms of printing money.
Right.
But I think from a tech perspective, he seems to be thinking in a more constructive way than others that I've seen in the government. But there's so many moving parts. And we just talked for 10 minutes about the U.S.
Yeah.
I mean, this is a big planet. Think about what China's going to do, and Europe, Brexit versus Europe, developing markets. I mean, it's a mess. And if anything, if crypto can solve any problem, it's getting governments out of that equation.
Sure.
Because they actually don't add a lot of value. AML has been an adjunct failure. We've spent $1 trillion collecting private information on people, which have only led to information hacks and doesn't prevent money laundering. And so the end game for governments here when it comes to money and banking is not good.
It's just a lot of uncertainties and unknowns. And have you, by any chance, engaged with regulators to try to, what's the word I should say, lobby or get them to understand what's happening here and the things that we need to move forward?
It's my day job is running a business.
Yeah.
So the answer to your question is yes, I do engage with regulators for myriad reasons, not only because we are a regulated entity, but also as a citizen who wants things to be a certain way. But I just have one voice. I may have a more informed voice, and the regulators are interested in what I have to say, thank God. But it usually, I don't impact regulation, let's put it that way. But I do try to engage. We talk to state regulators, myriad federal regulators, international. I consult to central banks in lots of countries about where this is going, and have for several years, right? Central banks in Southeast Asia and Central America, Mexico. I've met with all of them, and the level of interest in this space is incredible. They're all trying to figure it out. A lot of them are very frustrated by the U.S. because they don't want to be forced to do something that they see as unnecessary by overhanded U.S. regulation. That's a common theme, by the way, which is very frustrating as an American. But the interest in their perspective to figure this out, whatever that means, is extremely high.
Got it. So I want to switch gears and talk a bit about Ethereum and get your thoughts on Ethereum and DeFi. And where do you see Ethereum from an adoption standpoint? It looks like there's some enterprise adoption on the horizon. And,
I'm very bullish on the underlying tech for Ethereum. Mm-hmm. The scalability plans, while they were, the communication of how that was going to happen was not done well. The actual tech seems to be moving in the right direction. Yep. Phase 0 was a huge success. And for those that aren't clear, the initial staking of Ethereum to basically support Ethereum 2.0 is already completed, and that allows the system to move on to the next phases. So that makes me very, very bullish that this is being done correctly. It's being handled well. There's this misunderstanding, particularly amongst some of my friends in the crypto space who are more Bitcoin maximalists, about what Ethereum is there for. Ethereum is not meant to be a store of value in and of itself.
Right.
And I'm tired of OGs trashing it without actually even admitting why it exists. It exists to basically be an deployment system for decentralized services. And decentralization is a spectrum, right?
Yeah.
Bitcoin is the ultimate in decentralization because it has no knowledge of the physical world, right? Stable coins are not as decentralized because you have to have dollars in a bank account, right? DeFi that relies on a real world oracle is not as decentralized because if you don't know what the weather is and you have a smart contract that pays out based on the weather, right? The smart contract won't work. So while it's decentralized, it has a component of real world centralization because I need that physical real world information, whether it's the weather or a stock price or something else that derives value into that smart contract, or the price of two other cryptos if I'm Uniswap, for example. Okay, so decentralization is a spectrum, right? Even Bitcoin is reliant upon physically located miners with off switches.
Right.
There just happens to be enough of them where it would be impossible to take over the network, right? And so Ethereum to me represents the best opportunity we've ever had to develop decentralized infrastructure for application deployments, especially in finance to start. And then I think other services will be interesting, and gaming. I would kind of put gaming and finance in a similar bucket. And DeFi, which has gone from 0 to 60, as we say in the US, in 2 seconds, is a fantastic example. Now, DeFi is small by financial market standards today, but its growth is unbelievable, right? And it's going to continue to grow. It's going to have stops and starts, and I'm really bullish on its future. Okay, and so all of that right now is Ethereum based. Maybe other technologies, Cardano and Stellar and others, will have a role to play.
Right.
Stellar in particular, I think, is looking interesting as a competitor when it comes to stablecoins. But Ethereum is still the leader in stablecoin tech. Solana also looks interesting from the FTX guys. And so we'll see where this goes. But I'm very bullish on Ethereum as that application layer for decentralized applications, with the understanding that, again, decentralization is a spectrum.
Sure.
And if it scales the way it looks like it will, it's going to be a very interesting few years.
I'm looking forward to staking my ETH, and definitely looking forward to getting more adoption on that front. So I want to wrap it up with some rapid fire questions.
Cool.
What's your favorite food?
Oh God, I'm such a foodie. I love myriad ethnic foods. I have cravings. I don't look it, but my family's about half Sicilian, so I love Italian food. I love Indian food. One of my kids and I, we have a thing for certain types of Indian food, and we do that once a week. And but Greek, I'm an ethnic food junkie, and I travel a lot, so I always, pre-COVID, so I always got my fill. But I would probably say Indian, and I'll start with Italian, Indian, and probably Japanese, but I know you asked for one, so keep going.
No, that's good. I'm also the same. Growing up in New York, having a lot of restaurant options.
It's ethnic food central, right? It's amazing.
Yeah, for sure. Okay, you mentioned one of your favorite investment books, but maybe you can, if there's a book of all books from your perspective, what's your favorite book?
I love giving people the art of contrarian thinking, but also thinking fast, thinking slow, which is kind of the cornerstone of modern behavioral economics, is a good one. And I just did a break. And so if you're interested in why irrational people make the rational decisions they do, or the seemingly irrational decisions, thinking fast, thinking slow is the gold standard. And Pollan's book on psychedelics, and I think we're about to have and I just did a brain freeze on the title. But Michael Pollan, who's the famous author who writes about food, he wrote a book a couple of years ago that I've given to a few people on this kind of psychedelic revolution. And I think we're going to see a huge change in how we use psychedelics to treat mental health issues. And I'm extremely bullish on that. So those are probably two. I know, again, you asked for one, but those are the two I'll give you.
Awesome. Oh, what's your favorite movie?
Wow, so
That's
many.
A hard one.
I'm a 70s movie guy. I think Godfather 2.
Oh yeah.
Be my favorite movie of all time. As a kid, I loved Empire Strikes Back, but I think I'll go with Godfather 2.
Very nice. Favorite musician or band?
Oh, we'll stick with the 70s. I'm not. I don't want to date myself. I'm not that old. That's a little bit before my time. But I'm going to go with Pink Floyd.
Nice.
I love Pink Floyd.
And finally, when you're not working at Abra or looking at crypto, what's your hobby? What do you do for fun?
Yeah, I'm a single dad with three teenage boys, so I've spent a lot of time with them. I read a lot. I run. I'm a runner, hiker. I do a lot of hiking here in the Santa Cruz Mountain area where I live. And I do a lot of audiobooks on my hikes. All those basically take up most of my day if I'm not working. So, yeah.
Very cool. Bill, I've learned so much and excited to see all the new things that come from Abra in 2021. Thank you so much for joining us today.
Yeah, thanks for having me. This was really interesting. Appreciated the conversation.